The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Good to be back. I had a great conference out with the Denver Trading Group, and flew out there and taught them all about spreads and hedges and how to put all the different pieces together. So hope you all enjoyed that. Even had a few of the traders that I work with quite a bit already were out there, and feel free to let me know any questions you have. I'll be glad to continue to help you out and put all the different pieces together. And the biggest thing they loved is, of course, just seeing the massive leverage you can get access to. All right, let's go ahead and check out right now where the markets are at. I went ahead and put the quotes up on my screen. So right now we got the S&P. It is up. Right now we got it up quite a bit, 21 points on the day right now. And let me see here. I think there's an update on Thinkorswim, so I may have to go through that here in just a second and get that up to date because they're not updating all their prices. Okay, so let me knock that out. So get that done. They reboot their stuff and they do more updates, I think, than anybody I've ever seen in all of trading. So I do a lot. I do a lot of different updates, but I've seen just a ton of updates. In the meantime, what we'll do is, while that is doing its update, I'm going to bring you on over to here to TFNN and show you a couple things you need to know about. One of those things right here on the TFNN homepage is you need to know where the Nadex banner is. So you can see right there on my screen where the Nadex banner is on the right side of the TFNN homepage. And click on that right here. And once you click on that, then you'll see the Nadex website. And on the Nadex website, then you'll be able to actually view different pieces. The main thing I want you to look at right here is under trading. Okay? Where it says trading demo trading account. So right there, trading demo trading account. And click on that demo trading account link right there. And looks like it's not all coming through. Not quite sure what's going on with that. But right at the top of the screen, there's a menu where it says trading demo trading account. And fill in that information. And you'll see the username, the first name, the last name, and the phone number and the email address. And then click on Apply for Demo. And once you click Apply for Demo, then hop on back up to the top, and now you can log in to your account. And when you log into your account, you'll need to do a couple things. One of those is you'll need to make sure that you do use the Demo Account checkbox. So go ahead and check right on that checkbox right there, and it'll fill the Demo Dash in section for you. And then that way you can put in your username and your password, and then you'll just click log in. And for example, right here, if I log in with my account, then that'll flow on through there, and you'll be able to see the actual demo Nadex account. And with inside this, then you'll be able to, they'll put $25,000 of funding money in your account. You can start trading with it. They give you a couple weeks. If you want to get that demo extended, hop back over to nadex.com and then click on Create Account. Click on Open a Trading Account once that comes through. I know it takes a little second. But once that comes on through, then you'll click on Open a Trading Account. And then you'll fill the information in on that. So hopefully, that most of that makes sense there for you, what you need to do, and to put all that together. But just fill that information. It takes about 5 minutes to open that account on up, and you can get everything set and going, and you'll be good to go. It's only $100 to fund an account. The reason I brought up funding the account is if you fund the account, whether it be the 100 or 100,000, and you place whether it be 100 contracts or a single contract with a $3 risk, okay? Doesn't matter what the risk is, what the size is, anything. If you just place a trade, no matter how small or big, one trade with a live account, you call them up and they'll extend your demo out for a year. And so that way you can keep practicing, learning. Even once you get going live, you're still going to want to play around different ideas, make your mistakes in demo. Let the demo platform be the area where you do make mistakes. So, and I can show you a few things right here inside the demo platform. What you'll see on the left side of the demo platform is the spreads and the binaries, being shown right here. Looks like that's not coming through right now. I'm not quite sure why, but all right. So right here on the platform, we got spreads and we have binaries. Okay. On the spreads and binary section, then, and I know it's a little blurry, not quite sure why on that. We'll have to figure that out. But on the spread and binary section, they're totally different products. A lot of times people they just think binaries when they think Nadex, but the spreads are completely different products. Okay, and the binaries are probably completely different than what you thought binaries were. I've been writing up a bunch of Yahoo Finance articles lately. I can show you this over on Yahoo Finance if you just Google Nadex, and so I have this whole series I've been putting through different binary contracts, how binary price is impacted by time until expiration, how to set take profit orders, how traders impact the price of a binary, the 4 parts of a binary. So a lot of just little helpful things, and Yahoo's picking all these up, which has been pretty cool. But you go through, and I'm just sort of building up this little depository of different information on Nadex. But again, the binaries and the spreads are completely different. And if you're a trader already, you're going to like the spreads better. Okay? So out of the gate, if you're a trader already, if you're a futures trader, if you're a forex trader, if you're a stock trader, if you're an options trader, you're going to like the spreads better. Now, they're called bull spreads, but they're not bullish. They're bullish if you buy them. They're bearish if you sell them. Okay? And they can even be neutral. So, meaning you could buy or sell both of them for, possibly a premium collection strategy or a breakout strategy, a random walk strategy, different things like that. You can combine them in a lot of different ways. And they'll have most of them on both markets. There's only a couple they don't have on both, and I believe that's the Euro Yen and the Euro Pound. So I don't know why they haven't added those yet, or Aussie Yen and Aussie Euro Pound, I think that's what it is. Anyway, so we got to all email them and ask them to get the spreads going on those too. But you'll notice, right down, here, there it is. See, Aussie Yen and Euro Pound, they don't have them. So if you ever have an idea, if you think, hey, they should add the Aussie Yen and the Euro Pound spreads, then go to my account and click on Message Us, and then fill in that box right there. And you need to do that from the live platform. Obviously, they'll get a little more credit, right? So, or email customer service at nadex.com saying, hey, can you add these spreads? And notice you've had binaries for months. Where's the spreads? I want to trade the spreads. So as a trader, you're going to like the spreads better. And, a lot of people don't understand, why would somebody want to trade the spreads? Why not just the binaries or whatever? But as a trader, you understand the difference between where I buy and sell something is my profit, right? If I buy here and sell here, that's my profit. That's how spreads work. If it moves up 10 ticks and you can now sell it 10 ticks higher, you make $10. If it moves down 5 ticks and you bought, you'll lose $5. There's no all or nothing going on, okay? So the thing is, you get massive leverage, and you can hedge your positions very effectively. So sometimes you can go on and put on trades for very, very low risk. And to help find all this, what I'll usually use is I use the scanner that I made, because it just it takes a lot of the work out of it. And so for example, let me log on here and we'll pull it up. And this is a lot of the stuff I went through in detail at the Denver conference. And this stuff is also inside of our the site here at TFNN in the diagnostic members area section. But I'll go in and let me see here. I'll show you the scanner with how all this works. And I'll basically use it to help me find my hedge trades that I want to put on Nadex. So, but again, a hedge trade is a trade I'm putting on to lower my risk, right? Which makes sense. It's a hedge. It's insurance. If you're unfamiliar with the term, think of it in the sense of, if I go in and I want a, let's see if we got that on there. If I go in and I want to, hedge my house from burning down, I buy insurance on it. If my house is worth, say $300,000, and then the thing burns down and I pay $1,000 premium, to cover it, and I have a $5,000 deductible, then they basically give me $300,000, but I paid them, $6,000, so I get $294,000 back. Okay, so a hedge lowers your risk. It doesn't eliminate it. I still have that premium monthly risk. I still have that deductible, but it did lower my risk. And I'm able to now basically, cover that risk by putting on a very simple piece of the pie there. So now we got that. Now we can go back over here. And yeah, it doesn't recognize me as logged in. I had to disable and re-enable. So let's log out and log back in. If you ever see it says you're not logged in over on the scanner, it's really simple. Log out and log back in. Takes you about 2 seconds to solve the problem. Okay? So it's because the two browsers are talking to each other. So if you had to install your plugin or re-enable your plugin, or if there's a cache clear issue or whatever, see now it doesn't log into demo. And a pretty simple, easy thing to solve. But we go over here and I want to find, say, a hedge. Okay? And I'm trying to figure out, hey, what do I want to do? What's coming up? Okay, it's 117. And I go in and I'm like, okay, well, let's pull up a chart. So the first step, I need to actually, find a trade that I want to make. And so when I open that chart on up, and let's say we'll look at ES right now. Let's see what we got going on. Okay. So I open the S&P on up, and let's go in here, pull up a little shorter time frame there, and we'll see what we have. So once that loads on up, we get everything on it. Then we can look at making a trading decision. And once we make a trading decision, then we go, okay, well, now I want to hedge my risk off. Well, you sort of do that as a trader naturally, hopefully, by putting in a stop loss on a trade. So, you may go in and put your stop maybe 2 points away or half a point away. Who knows where you're going to put? Maybe 3 points away. I don't know where you place your stop losses. It's all about whatever method you decide to use. But if I go in here and I'm like, you know what, S&P, she's heading on down. She's going down. Okay. Now, we're down quite a bit. We're at the 1 deviation. We're bouncing off that. But let's say I just think the market's going to continue to fall. Okay? And I wouldn't be hopping in right now. It's like we're right within our range. I doubt anything's going to happen in the next 40 minutes anyway. But if I thought, just for fun, okay, if I thought the market was going to continue to drop at this moment, then what I could do is a couple things. One, I could open up a position on the S&P to go short. Okay, so I go over here. I'll pull it up. Just do a sim position for you just to let you see what I'm talking about. And then we're just going to go in and, either go short or go long, however we want to do it. Okay, so we're going to say go short, even though I think there's a higher probability of long, but we'll just go short right now. And we'll go over here. Stay right there, because now what we're going to do is we're going to add into the position. Okay? Stay right there. We'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. Okay, so just showing you an example of a hedge trade. You know, it went down, hit the range. I'm like, I think it's probably going to pull back on us. But it did actually start to pull back some. It's leveling off. It may go back down now. We'll see. But, I mean, we still got another good, 30 minutes into the hour here. And we'll see where volume and everything else takes us. But you want to put the position on. You think it's going to go down. You think it may break below that 1.5 deviation. You know, whatever your reasoning is. Whatever system you use. It doesn't matter what system you use. Okay? And so you go in and you go short the S&P. Well, the S&P ticks in quarters, like 0.25, 0.5, 0.75, 1, okay? Every quarter is worth $12.50. So if you have 4 quarters in $1, 4 times 12.50 is 50. 12.50 plus 12.50 is 25. 25 times 2 is, 50. So one S&P 500 future point, which is 4 ticks, is worth $50. Well, the U.S. 500 spreads tick in 0.1, and every tick on every spread is worth $1. So 0.1 are dimes. There's 10 dimes in $1. Like the S&P has 4 quarters in $1, right? The U.S. 500 has 10 dimes in $1. Every dime is worth $1. So a 10-tick move, a 1-point move, would be a what? Would be a $10 move. Okay? And, well, if you want to get a hedge, then you need to have enough spread to cover the risk in a 1-point move in the S&P. So if you get 10 points of profit, like if the market moves up on a spread, and you lose 50 points on the S&P, obviously you need 5 spreads to get 50 points of profit to cover a move of, a $50 loss on the S&P. And so now basically what happens over here is we went in and we put on a spread We bought it at 1842. We sold the S&P over here at 1840.25. It's $1.75. Well, every tick on the S&P is 0.25. So 7 ticks times 12.50. So we have $87 of risk on this trade, max, okay? And as of expiration, that is the worst it could possibly be. It could easily be less, but it won't be any worse. And that's basically if the S&P went up to 1842 and kept going all the way until 2 o'clock, expired above that, then that's where we would actually, suffer a loss on the trade. But the most that loss would ever be would be less than 2 S&P 500 points. So as you can see right now, we're actually starting to exceed that point, and now the S&P is up 87.50, and the spreads are down 75. How much can the spreads lose total? Okay, what's their max loss? They're going to keep some of their value, but what is their max loss as of expiration? Well, if I sold them at 1842, and the floor is 1840, the most they can lose is 2 points, which would be 20 ticks. Every tick is $1. The most they could lose would be $100. Okay, so 20 ticks is basically my risk. $20 is my risk. I got 5 of them. That gives me a $100 risk in the trade. Okay, so I got $100. I'm already down 75. So not really a big deal there. Only got $25 more of loss. What's cool is once this makes 75, it's really going to start passing up this amount because you're always going to have a little bit of premium in there. If it keeps going, gets to 100, now that's where you're really making money. But no matter what, I have no fear because my risk is not going to increase past 87.50. So my heart doesn't have to, go boom, 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 boom. More and more and more fear coming in. Is it going against me? Is it going for me? What am I going to do if it gets there? What am I going to do if it's my stop loss? I don't have a stop loss. Okay, I guess you could say I do have a stop loss, but it's all the way up at 18.50. Okay, if it went that far against me and all I lost was $87 on a full S&P E-mini, meaning the market went from basically 10 points against me and I only lose $87 instead of losing $500, that's fantastic. I'm good with that. So I go over here and I'm looking at these S&P 500 futures. And I grab, just to make it easy, we'll go over here, we'll draw it out. Okay? And let me shrink these bars up a little bit for you. And so we go over here to 1840. To 1850. Okay? So when we went short, right over here, like right here, a little bit earlier, we went short right there. Okay? And this is, by the way, my favorite way to trade, period. Doing what we're talking about right now. Out of all the things I know, it's my favorite thing. Now, I'll do it with a lot of different strategies or systems, different rules for entry and exit. But just the simplicity and the relaxation of this is outstanding. I'll explain a little bit more when we get back. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. All right, so we get the S&P trickled on down, exceeding volume, looking like it might want to actually break that expected range. And I'm going with the current, trend so far, thinking, hey, it might go back up, but my system says go down. So let's take the short, but it makes me nervous. I want to hedge this thing off and see how it goes. So when we go short an S&P futures contract. I know you hear me talk about Nadex so much, but we go short an S&P futures contract, and then we hedge it off with 5 spreads. So that way we get $50 per point value, just like we have on the S&P. We buy an 1840 to 1850 spread, which means it will only hedge us up to 1850. Okay? So at that point, I would need to get out of the trade if the S&P moved all the way up to 1850, which would be 10 points against right now. It'd be about 13 points against where we're at right now. Okay? If that did happen, if it moved that far against us, then we would basically, how do I put this? The best way I can put it. If that happened to us, the worst thing that would happen would be we'd lose $87.50. Okay? Between now and 2 o'clock. So notice I used a very short-term spread to hedge, because I shouldn't need a spread that goes for 8 hours. Okay? I just need one to get me past, a certain point where I can go to, possibly break even on my trade, lock in, at least $100 to cover that spread loss. And then beyond that, I'm good. Now, if I wanted to, I could go in and I could start tightening my stop, trailing my stop. I could put my stop to buy back, like over where the $100 price marker is. Okay, so I go, okay, where am I at? $100. Right now I'm down 75. So if I brought that up a few ticks, a few more ticks, 1.5. So, but I could bring it back up to where I'd basically be at 100. And then if it lost, like I made $100 on my future, lost 100 on my spread, but if the spread goes back up, then I could make money. So you can make money in like a lot of different directions right now. Now we're up about 175 over here. We're down $100 on our spread. So we're not up 100 total. We're just up 175 net. Now, again, were I to take profit right now at $175 and I lost $100 on the spread, I'd net a $75 profit. Okay? If the market goes back up and flies back up, then I could actually end up losing less, or actually making even more on the spread, not losing the full $100 on the spread itself. So it's a really, really cool way to trade. Something else I could do is I could use this to scalp. Okay? So let's say you think the S&P is just going to be range bound. It's just going to bounce. Like it goes down here, comes up here, it's going to come right back down to the range, go back up, come on back down. Well, if I've made, $175 on here, I could close that thing out. When it goes back up, all right, I could put it on and sell it again because I still own the spreads. I don't have to sell them again. I still have them. I have them all the way until 2 o'clock. I don't need to worry about them at all. Okay? So, with this, what this really gives you the ability to do is now, as a trader, one of the first things you're going to need to get to, now you need to get you need to get your risk management down, and you need to get down your system and your platform and your execution and your analysis and all that fun stuff. But you want to get to where you can do at least 2 positions. Because as you trade, you're going to see certain things that makes you think, I should probably get out of this. But a lot of times you're wrong and the thing keeps going. And so it allows you to take partial profits and still allow profits to run. So you really want to get to become a full-time trader. It really is something you want to get to where you can actually do at least a multiple of 2. So, or 2 or more. Doesn't mean you should go there right away because you need to have the money to have the risk management to pull that off. But to really take advantage of profits that run, you want to be able to do multiple contracts. So again, what I did on here, and again, this remember I said if you're a futures trader, a forex trader, ETF trader, all that, you'll love the spreads better. So I simply went in, I shorted the S&P. My system said go short. I went short. I bought 5 spreads. I bought them at 1842. I sold this up at 18. Where do we sell it at? Over here, we sold at 1840.25. So basically, I have 1.75 risk, which is $87.50 risk on the trade. It'll hedge me all the way up to 1850. The market were to run back up to 1850, then I could close the thing out, and basically I'd lock in the profit on the spreads and lock in the loss on the futures contracts. So it's if you just sit back, your thing is your P&L is not going to get greater than $87.50 on the net between the two. So as you see the green go up and the red go down, you know that I don't have to make a decision until 1850, which is very far away, on closing this trade out, and I don't have to worry about getting stopped out on a few point move. To keep a risk of 87.50, you have to have at least less than a 2-point stop loss. So I don't have to worry about that problem. And so I don't have to worry about getting stopped out. I don't have to worry about, do I get back in? Do I go short again? Do I go long? Do I sit out and watch it move? I don't have, all those psychology games are not happening inside my head. I'm just sitting back, letting the thing play out. I see volume, is going on. What's happening? Well, the bars are closing down. That's good. Okay. They're breaking the successive lows so far on each bar. That's good. We're continuing to get down closes with volume exceeding expectations. Okay, that's good. All right, so I'm just going to, chill, sit back, and let the thing do its thing. Now, again, if I did 2 contracts, I could go in, and once I say I made $200 on one side, which remember my max was like $87.50, so I guess I could actually take off half now if I did 2, then I'd be able to, at double, take off half, move the other one to break even, and now I eliminate my risk in the trade. I can't do that because I only did 1 contract. So you really are going to want to get to those multiples of 2s as soon as you can afford to do it correctly. And if you're stressed about the trade, 1, you're not using something like this like a hedge. 2, you're risking too much money. So when I say go to 2, you can't do that until you can do it without stressing out over it. And you're going to stress out over it if, like, risking 2 contracts is going to be 10, 20, 30, 40% of your account. So I actually like to risk. My rule for risking on the elite trades is that I do is actually I like to 5% of my account divided by 6. And if I'm net 6 trades down in a day, then I'm done. Well, that's really, really rare and very, very difficult. Okay? So it allows me to trade, as much as I want. Now, I don't cap my profit. I mean, because I let it run, it could keep going. All right? But cap that risk, and when a trade takes off, it is awesome. Okay? But by capping that risk, I basically found, for me, and a lot of traders I've shared this with, if you take 5% of your account, you divide that number by 6, you can actually psychologically take that hit and take the next trade and the next trade and the next trade and the next trade. After about 6, you can't take any more, even though you've only lost 5%. But you still can come back the next day because you're only down 5%. And you can take that next trade the next day. Okay? So it's finding that right percentage of risk where your mind doesn't really process it as a defeat. It just sees it as a transactional cost. And, yeah, you won't necessarily get as rich overnight, but you also won't go broke overnight. Okay? So you'll slowly, but you'll be surprised quite quickly, compound it and let the thing grow. And, by the way, that 5% divided by 6, I only change that number 1 time a month at the first of the month. So I go in, I go, what's my balance? What's 5% of that? Divide that by 6. And I use that number all month long. Do the same thing the next month, the same thing the next month. Okay? And so, if you're having significant drawdowns, you'd probably want to recalculate that 5% number again. But I don't ever compound up except for 1 time a month. I can compound down, but I won't compound up. Okay? And the reason is when you compound up too quickly, you quickly give back all your gains. When you have just a couple bad days, you can wipe out weeks of profits. But anyways, notice this things went down to 200. It's went up to 125. We were at negative 50 for a while. It's just moving around. It's just, I'm okay with the risk. I'm okay with having $87. If you get an S&P trade and you're not okay with less than a 2-point stop loss, then good luck. Because if you have that type of a stop loss, you better be catching some big runs and not, scalping, because you're going to get hit all the time. And so I'm not completely surprised what's going on, but I'm surprised it actually went down as far as it did. We're getting a little run back up, but see that little close to close line right here? With an expectation that moved back up to here. It's about what I expect it to do. It came really close to it. It actually already came up to it once, came back down, ran back up to it again. So we'll see if it decides to break on down going into the next hour. I mean, it's really respecting all the ranges pretty well on the S&P. But again, I can sit back, I can relax, I can chill out, I can let it do its thing. I'm free mentally to do that because I'm not freaking out about my P&L. So, yeah, I'm down 100 on my spread. I'm up $125, $150 on the second on my future contract. And if everything just went completely against me and Yellen came on and said something, or Obama said something, or whoever said something, Draghi comes out, who cares? Whatever happens, I just need to be out of the trade if it hits 1850. So it's pretty simple. If you want to get really cautious about it, you could go up and put a stop way up here at 1850. The problem is when you do that, you then better be ready to, make sure don't forget to cancel it because it's so far up there you're not going to see it. But, you ought to have a pretty good idea. The thing's going that high. It's like, tighten it out. Now, of course, you'll make the money on the spread at Nadex. Like, let's say if it goes against you, okay? You'll lose the money over at the future side. So make sure you have the money for the drawdown. So you have the $500 of drawdown for a 10-point move against you. And you should have that if you're trading futures. But if it moves $500 against you, make sure you have that because you may make, say, 400 over on the spreads, lose 500 on the S&P. You're only down net 100, but you're down 500 in your futures account. You're down 400, or you're up 400 in your spread account. And, when needed, hopefully you don't need that often, but when needed, you could, take money out of one account or the other and just, wire it to yourself and wire it into the other account. Okay? One win on the spreads will actually cover a lot of future spread trades. Like, let's say you lost on the S&P, you were down $500, but you made $400 on the spreads. We're only risking $100 on the spread, so every once in a while when I have that loss, it's sort of going to like replenish my Nadex account to pay for future hedges. Because, I mean, $400 profit on a Nadex on this position would actually give me 4 $100 hedges for future S&P trades. So the S&P is more likely, if it's profitable, great. And then the spreads, if they are profitable, they'll replenish your Nadex account pretty much on their own, because you're bound to have some, losing trades here and there. Now, one of the things I did want to talk about, I've talked about this lightly. I haven't went into it in a lot of detail, and maybe we should start hopping on and doing some of these during live hours, is literally just scalping the trade, okay? Just over and over again, scalping the trade. And again, that's when it comes down, you buy it back, it oscillates up, you sell it, comes down, you buy it back, oscillates up, you sell it, okay? And just looking to do that again and again and grab like $25, $50, $25, $50 over and over and over again. It sounds insane, except for the fact that we have a hedge on to help protect us, okay? Now, I prefer to do this, all right? I would prefer to do scalping like either at a deviation level or in between like a range and a close, because you'll see it bounce right here. If I do it right here, I really need to wait for it to get back up to this area to not really be taking on a lot of additional risk. So I got to have like a 3-point retracement to really have another scalp. Whereas if I can get it, more on a deviation level, then that can often work better. But deviation levels are often where you'll see the market just bounce up and down, up and down. So we go here, we look at, like, here's the one deviation move. So like we see it like going up, we crossing that over and over several times. It's 0.7. See how it literally just bounced up and over it. I mean, again and again and again. You put one on right when it hits that deviation, and then you literally just start scalping it every time it comes back across it. Back and forth, back and forth. Again, just trying to grab 25, 50, 75 bucks, as many times as you can before expiration. Now, as of expiration, let's just say you are trend trading, okay? What do? Do you have to close the future contract because your hedge is gone? Or can you leave it on? Well, again, this is another benefit of doing more than one contract. But you don't have to close it. Now, if you're losing, if you're down on the trade, it'd probably be a good idea to go ahead and just close it out and take the profit on the spread and call it a day and find the next trade. But if you're profitable and the spread expires, like this spread is going to expire here like in the next 12 minutes. Okay, so if we went in, we took it over, near 2 o'clock or whatever, it's going to expire out. And it's not going to be there to protect us anymore. So my risk will now be uncapped. Like right now, I basically have a capped risk of $8,750 up to $1,850 on this futures trade. So what should I do? Well, I know I lost 100 on the spread if it expires here below it. So I don't want to, ideally not lose less than $100 on the future contract. So let's just say this thing was running and we were down. It was like, we were up $300-400 on the trade. Then at a minimum, I would want to at least set my stop at a bare minimum to where I made $100 to cover the loss on my spread. Okay? And then I could then trail it according to other methods past that. So that's what I do. If it expires, the hedge is only there to reduce my risk. I don't need it once I have protected my profit with a stop, because my profit's protected on the trade. Don't have to worry about it. So let me get a call. We got Mike from Dallas. You there?
Hey, Darrell, just real quick.
You
had mentioned scalping. Do you use binaries, and do you use it towards the end of the when the binary is about to expire?
On this one, I was talking about scalping with futures using Nadex, but I do use binaries to scalp as well. You don't have to wait until expiration that you can do it. If I do it near expiration, I'll use expected volume versus actual volume and trade the direction of the breakout closer to expiration. One of the ways that I'm doing a lot of we got a lot of traders doing this is they'll wait till it comes down to about 75% of the expected range.
Okay.
And then they'll look to buy a binary for about $15 that's at the expected close because we expect it to pull back.
Okay.
Okay.
Excellent.
And then they'll sell it out at 45. So they'll buy 15, sell at 45, make 200% on a small scalp there. All right, we'll be right back after this break.
A maiden was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. You there, Mike, still?
I am. Thanks.
All right, cool. Yeah, you bet. Okay, yeah, so on the binaries, now on this one right here, I mean, you just scalp the futures by getting in and out because you have a hedge on over and over again.
Right.
On the binary contracts, you'd go in and basically find like where the close to close is. So like in this case, expect the close to close to be at 1839. So I try to find a strike as close as I can to that. So we have at 1839.8. So that might be the strike you choose, or you'd look the next hour out because we're getting so late in the hour right now.
Right.
But I want to say you did choose that one. Then basically you're going to go for making 200% return on it. So if I buy it for 8, I'm going to try to sell it for 24. Okay?
Okay.
Or, I mean, I could go for, hey, say it's going to go all the way back up. I could, say, sell it out for, like, say, $45, $50 on the trade when it hits that strike as it moves up. I'd sell it a little sooner because it's higher than my close to close. But I really like doing that as far as scalping. And then, of course, the EPCs, those are very short, quick trades. But, I mean, scalping is just, where can I make the maximum value in the smallest move? And I either can do it with the lowest risk on an out-of-the-money binary, but using, like, a simple strategy like in a range where I expect it to bounce. Or I can do it on an in-the-money and just collect the scalp. I can scalp the premium, the time decay.
Right.
But you can see how here, over and over again, it went down, it went back up to like that 1839, went down, went back up, it went back down, it could go back up. We only got about 5 minutes left. But you're talking a 200 or 300% return by using that expected range and close range like 2 or 3 times in the same hour.
Okay.
On about anywhere from a $8 to a $15, $20 risk. So really cool, very cool way to scalp.
And your expected range is based on the previous candle?
No, this is my expected range for the entire hour.
Oh, okay.
So I'm actually plotting out the entire expected range for every single hour of the day, every single day of the week.
Okay. Okay.
And so over the next hour, I expect it to go down to here and to come back up to the close to close. And that's, we're seeing that happen again and again and again. I think we're on our third or fourth round trip here. So there's a lot of those turns happening. Each one of them, 1, 2, 300% return on the trade, maybe even more if you trail it.
Right.
And I mean, you can lose quite a bit with those kind of profit loss ratios and still come out quite nicely.
Okay. Well, thank you so much, Darrell.
You bet. No problem.
Okay.
All right, well, that was Mike again from Dallas. Appreciate you calling in. And, again, we're just checking out this trade. Again, we're coming up right here on 2 o'clock. Our spread is about to expire. Okay, so sort of just draw that line there. It's going to expire out. We've got to make a decision. We want to take profit. Do we want to see if the thing will just continue on to the next hour, maybe make some big money? What do we want to do? Okay, at a bare minimum, we want to make sure that we do lock in a $100 profit, which would be 2 points below where we sold. So 1840.25, going to go down to 1838.25. Okay, so we want to make sure we at least have, a stop, limit market order in there. And reason for that is because I risked $100 on the spread. I don't want to give my $100 away I made on the spread. Okay, or that I lost on the spread. I made $150 over on the future. If I give that money up, then I'm really hurting myself by not putting that in there, because the idea here is either one, I want to scalp and make $50 at a low risk. I was up $100 at one point, which is over 100% return on my risk, or two is maybe I'm really trying to see if I can catch that big move. So I might just get kicked out of the trade or tick away. If I get kicked out of the trade, I'm break even. That's the worst thing that happens to me. Okay, so I mean at this point I can't lose on the trade. Now it's just a matter of how much can I potentially make. The market does drop down. A lot of times you'll see more volume and volatility going into the beginning of an hour. If it does start flying down, then I have potential for a lot of profit. And if it flies up, next trade, let's find the next one, no loss. So, all right, hopefully you picked up a couple things. But if you're a futures trader, you should be checking this out. This is options to hedge day traders, futures and forex traders. All right, hope you have a great day. I will talk to you later.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.